Thank you for joining us. Tom Patrick's my name, and I'm Head of Healthcare Property here at Barwon Investment Partners. I'm joined today by Sophie Bannerman, who is a Portfolio Manager for the Barwon Healthcare Property Fund. Hi Sophie.
Hi Tom, good to be here.
Commercial property markets have been defined somewhat over 2023, at least so far, through really declines in valuations. We've seen steep declines in valuations, particularly around office and retail. How is healthcare real estate faring, if you could, and maybe specifically to the Barwon Healthcare Property Fund? What have you seen over 2023?
Yeah, so great question, and as our viewers may be aware, we undertook a portfolio evaluation early in the year, and that saw every property in the fund revalued. So in healthcare specifically, we've seen cap rates move generally 25 to 75 basis points. For the fund specifically, the weighted average cap rate has moved around 57 basis points to 5.73%. And going forward, we've actually reinstated our rolling monthly portfolio valuation timetable. So what we've seen this quarter is that since cap rates have moved from the start of the year, there hasn't been really any further significant softening, and we don't really expect much more in the medium term.
Okay, and that I think goes well to our thesis that healthcare real estate should fare better through different economic cycles. We're hearing stories of the office market where we're seeing 120, 150 basis points softening on even prime Sydney CBD office buildings. So not a bad result then for healthcare so far, do you think?
No, not a bad result, and it does really show the thesis that healthcare has been less volatile and more stable as an asset class.
I think in this type of market, generally commercial real estate volumes of transactions are going to be a little bit lower. That being said, we have seen some activity in healthcare property over 2023. What has the Barwon Healthcare Property Fund been up to in regard to acquisitions or continued investment over the last little while?
Yeah, so we've been continuing to invest in this market. We like to edge in, edge out of cycles, so that means we're still looking at acquisitions, still doing transactions, but obviously being quite cautious, being very selective in what we buy. And last quarter we did actually settle on a new acquisition. It's a property in WA in Shenton Park. It was a former hospital which has been converted into an allied health property by Hesperia Group, a Perth-based developer, and is leased to some great anchor tenants. So we've got Western Kids Health there, who provide paediatric allied health services, and Headway, which provide mental health services to the community. So a really good addition to the fund, and we're looking at more transactions. The start of the year, the market was a bit slow, but this quarter, transaction volumes have definitely picked up, and there are a lot of opportunities on and off market. So we're continuing to look at things every day.
And medium term, I think one of the consequences of the inflationary environment we've had, certainly we've seen construction costs increase quite significantly. One interesting thought is that the benefits of that for us and the portfolio that you already have could mean medium-term rent growth that might exceed CPI, given that our assets are well positioned. It's very difficult to go out and build new medical centres, and as a consequence, I think construction of new competition will be difficult.
Exactly, and we're seeing that come through not only in our valuations, but on the ground for our asset management team. We've been able to negotiate decent rental increases, which is reflective of market, and we do expect further growth over the next 2 years.
Terrific. Thank you for your insights, Sophie.
Thank you, Tom.
As always, if you have any further questions, would like to talk with myself or Sophie about the fund, please feel free to contact either of us or indeed any of the other members of the Barwon Investment Partners team.